Imagine a stream of money flowing into your bank account month after month, year after year, without you having to lift a finger. Sounds like a dream, right? Well, it's not. Welcome to the world of dividend stocks. Let's dive into the fascinating realm of dividend stocks. These are shares in a company that pay out a portion of their profits to shareholders, like you and me. So, when you invest in dividend stocks, you're not just betting on a company's success, you're actually getting a slice of that success delivered straight to your pocket. And the best part? This happens regularly, providing a consistent source of passive income. Dividend stocks are a smart choice for anyone looking to build long-term wealth. They're like the tortoise in the race, steadily and surely heading towards the finish line. So for those with patience and a vision for the future, dividends can be a game changer. Today, we're going to reveal the top 3 dividend stocks that could be your golden ticket to a steady stream of passive income. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. Kicking off our list is Clearway Energy, ticker symbol CWEN, a leader in the renewable energy sector. In the rapidly evolving world of energy, CWEN stands out as a beacon of potential. This renewable energy giant has been making waves, not just for its commitment to sustainable power, but also for its impressive performance in the market. It's a company that has consistently shown resilience, innovation, and most importantly, profitability. CWN's robust portfolio boasts an array of solar and wind assets, coupled with natural gas and conventional generation facilities. This diverse mix of assets has helped the company maintain a steady stream of income, even amidst fluctuating market conditions. But what truly sets CWN apart is its commitment to consistent dividend payouts. The company has a track record of rewarding its shareholders with regular dividends, demonstrating its financial strength and its dedication to sharing its success with those who have invested in its vision. Clearway Energy's strong performance is not a fluke, it's a result of strategic decisions, forward-thinking leadership, and a clear vision for the future. The company's focus on renewable energy is not just environmentally conscious, it's also financially savvy. As the world shifts towards greener solutions, CWN is poised to reap the benefits of this global trend. What's more, CWN isn't just looking at the short term, it's playing the long game. The company's investments in renewable energy infrastructure are laying the groundwork for long-term growth. This means that investors can not only look forward to regular dividends, but also the potential for substantial growth in the value of their investment over time. In conclusion, Clearway Energy presents a compelling case for those looking to invest in the renewable energy sector. It's a company that combines a commitment to sustainability with a proven track record of financial success. So, if you're a believer in the future of renewable energy and want a slice of the profits, CWN could be a solid bet. Next up is Enbridge, ticker symbol ENB, a powerhouse in the energy infrastructure industry. Enbridge, with its vast network of pipelines spanning North America, stands tall as an undisputed leader in the transportation of energy. The company's impressive track record is a testament to its operational excellence and strategic foresight. For over 6 decades, Enbridge has been delivering energy in a safe, efficient, and sustainable manner, earning the trust of millions. What makes Enbridge a compelling choice for passive income seekers is its robust dividend history. The company has not only consistently paid dividends, but it has also increased them year after year for more than 2 decades. This trend reflects Enbridge's solid financial health and its commitment to return capital to shareholders. But it's not just about dividends. A look at Enbridge's performance shows potential for steady capital appreciation. The company's strategic investments in renewable energy and natural gas point to a future of sustainable growth. With a clear vision and a robust business model, Enbridge is well-positioned to navigate the energy transition and create long-term value for its shareholders. Moreover, Enbridge offers a balance of income and growth. The company's stable cash flows, backed by long-term contracts, provide a strong foundation for its generous dividends. At the same time, its investments in growth projects promise capital appreciation. This balance makes Enbridge a compelling pick for those who want both income and growth in their portfolio. However, like any investment, Enbridge comes with its own set of risks. The regulatory environment, commodity price volatility, and operational risks are some of the factors that could impact the company's performance. Therefore, it's essential to thoroughly research and understand these risks before investing. If you're seeking stability and a healthy dividend yield, ENB could be the perfect fit for your portfolio. With its robust business model, impressive track record, and commitment to shareholders, Enbridge stands out as a solid investment for generating passive income. Last but not least is Verizon Communications, ticker symbol VZ, a titan in the telecommunications industry. Let's delve into why this company is a force to be reckoned with. As the second largest telecommunications company in the United States, Verizon Communications is a household name, synonymous with wireless services, broadband, and fiber optics. Providing services to millions of consumers, businesses, and government agencies, Verizon's vast network and market dominance have made it a staple in the telecommunications sector. But it's not just Verizon's size and scope that make it appealing. This telecom giant has consistently paid dividends for over 3 decades. Yes, you heard that right, more than 30 years of consistent payouts. That's a testament to its stability and commitment to returning value to its shareholders. And when it comes to dividend yield, Verizon is no slouch with a yield that often outpaces the broader market. But dividends aren't the only thing that should pique your interest in Verizon. The company's potential for long-term growth is another compelling factor. As the world becomes increasingly connected, the demand for Verizon's services, particularly in areas like 5G and broadband, is only expected to grow, and with its strong balance sheet, Verizon is well positioned to invest in these areas, expanding its services and, by extension, its potential for revenue growth. Moreover, unlike many other companies that cut dividends during economic downturns, Verizon has a track record of maintaining and even increasing its dividends during such periods. This resilience makes it a particularly attractive choice for income-focused investors who prioritize stability and reliability. So, if you're on the hunt for a dividend-paying stock with a strong market presence, a consistent history of payouts, and the potential for growth in an ever-evolving industry, Verizon Communications should be on your radar. If you're looking for a dividend stock with a solid track record and the potential for growth, VZ could be your answer. There you have it, the top 3 dividend stocks that you might want to consider for your passive income strategy. Let's take a moment to revisit these investment opportunities. First, we've delved into CWEN, a renewable energy giant that's making waves in the green energy sector. This stock offers a fantastic dividend yield, and its commitment to renewable energy is not just a trend but a sustainable business model that's set to thrive in the years to come. Next, we discussed ENB, the energy infrastructure behemoth. A steady player in the energy market, ENB presents a reliable dividend income stream with its robust infrastructure and stable cash flows. This stock is a testament to the fact that traditional energy sources are still a crucial part of our energy mix. Lastly, we explored VZ, the Telecommunications Titan. With its strong position in the communications industry and its impressive dividend yield, VZ is a stock that can boost your passive income while offering potential for long-term growth in this increasingly digital world. However, as exciting as these stocks may seem, it's vital to remember that investing always comes with risks. It's essential to conduct your comprehensive research before diving into any investment. Understand your financial goals, risk tolerance, and investment horizon. Remember, what works for one investor may not necessarily work for another. It's also worth noting that while we've focused on these 3 stocks today, there are countless other opportunities out there. The world of investing is vast and diverse. It's not about finding the best stocks, but rather it's about finding the right stocks that align with your investment strategy and financial goals. Remember, the key to successful investing is diversification and patience. Investment is a marathon, not a sprint. It's about steady growth over time, not overnight success. If you enjoyed this video, don't forget to subscribe, like, and share. We've got plenty more investment insights and tips to share with you. So stay tuned, and let's continue to navigate the exciting world of investing together. But wait, we've got a bonus tip for you. Now, we've talked about CWEN, ENB, and VZ. All excellent choices for dividend investing. But there's a crucial aspect we haven't touched on yet. That's the importance of diversification. You see, investing solely in dividend stocks, even strong ones, can expose you to certain risks. If a company's profits dip, their dividends might be the first thing to get cut, and that could spell trouble for your passive income stream. So, here's our bonus tip. Diversify your portfolio. Consider mixing in some growth stocks, bonds, or even real estate. This way, you're not entirely dependent on dividends for your passive income. It's a bit like not putting all your eggs in one basket, you know? It's smart, it's strategic, and it can help you safeguard your investments while still enjoying the benefits of passive income through dividends. And that's a wrap. Thank you for watching. Don't forget to subscribe, like, and share. Until next time, happy investing.